Good afternoon, traders. It's Mark here from the Day Trading Room. The time is 2:15 London time on Monday, the 20th of December, and we are into Christmas week. A fair few days since I've done a video, but my trading has been very light last week, and I expect it to be the same this week. I don't expect to be doing many trades at all. We've got the markets are closed on Friday, of course, Christmas Day at the weekend, and the same for next week. I don't want to be spending too much time on the markets, so I will have the screens up, I will have alerts set, and I will be looking in, but I don't expect to be doing too much. Christmas time, what can we expect on the markets? Well, range bound trade would be the most likely, but not ruling out just a push upwards, just a continued push upwards. That's the path of least resistance. I've seen it before on Christmas week. It just plods on, the volume's low, each candle is doing sort of 5 or 6 ticks, and it just keeps just plods itself on. So I won't be getting involved in that sort of day. If we get some nice range days, maybe a little bit of a pullback, I'll look to get involved in it. But other than that, barring any news, I'm going to keep it light. But let's run through last week's trades. Got Wednesday, Thursday, and Friday to run through. Not many trades, but let's talk about some of the thoughts behind them and some of the setups anyway, because we've still got to make our livings even if the market's quiet. But I'm only looking for one good trade only, one or two good trades only when the market's quiet, the volume's low, the edge is diminished. It's very difficult to judge the tape when it's quiet. You can't see those big orders. The pits, you can listen to the pit audio, you hear that there's nothing going on in there. It's just small orders, locals just dabbling with each other, and that's pretty much what that happens when we get the low volume. So we really need to pick our spots carefully and not be afraid just to get out if it's not working. Reduce the size and really look to try and just take something a little bit out of the market. Anyway, let's get on with Wednesday's action. Wednesday we just pushed up. Prior day's high was this dotted green. Tagged it once, twice, 3 times, popped over about 6 ticks, Kane's back under. That to me was the confirmation that that was a good resistance level. There was just no buying interest above it. One more tag of it. And so I tried to coincide that with it. Okay, it was a good level from before. It's proven itself, should I say, as a good level today on Wednesday. So that's a great level to get involved in. Combine that with something else. Okay, nice if we've got a tick flush. Didn't get it, but I'll take the midday push instead. These lines, as I said before, 12 New York time. Just looking for that last little midday push before the market potentially rolls over. Got that last little push. Pushed up, tagged the resistance level, and just started to roll over and just took the short there. Looking just really for 10 ticks, which was going to be the VWAP, unwind into the VWAP, drag the stop to break even plus a bit, keeping it nice and tight, and then just seeing if we got a further rollover. That's incorrect. That should be there. Got the 10 ticks. As you see, even the target, the VWAP target was only 10 ticks, so we've got our 10 points there. Held the half left over, dragged the stop to break even. Wasn't prepared to give this any room whatsoever. The edge was completely diminished. It's a case of small edge, let's have a little go at it. Let's keep the stops tight. Stops were above that high from the initial trade, which was about 7 ticks, so nice and tight stops. Targets first on 10, second was going to be a further push down. Got the 10 here, as you can see, tagged the VWAP, just poked under it, so there was our 10 ticks sitting in the book on that one. We just paused here, and this was just a nice little bonus really. Getting a bit bored of the trade, it was just taking forever, the edge was not there, but as the market was moving in a direction, no real reason to close. We just got this nice little push lower. Little volume flurry, probably the best of the midday session. Spike lower, low ticks, and you know me, if I see a low tick reading on volume, I'm not going to look a gift horse in the mouth. And the exit was around this level here, so very pleased with that. 20 ticks and 10 ticks, 20 points and 10 points. Can't complain. Slow trade, but that's the way it is. Why didn't I hold for this last little bit? Well, as I say, low tick flush, good volume spike. The day wasn't really that sort of day. Very close to the gap fill. A few ticks off. Okay, we got one more flush. Maybe could have got a few more points out of it, but I don't worry about that sort of thing. That was Wednesday. Just the one trade for me, I think, on Wednesday. Yeah, just the one trade. Sort of felt lucky. We did start to pick up a bit of action in the evening, but again, limited edge for me. I felt I didn't really feel there was much going on there. Even though the ticks had started to, because of the ticks have been so meaningless in the middle and during the day. We hardly have any high or lows. When we just started getting this action, pushing back into levels, I just kept out of it. I just took my 30 point, my 20 and my 10, and said, let's just see what happens on the next day. Really playing defensively, and that's just want to quickly say something about that. That's quite key to trading, knowing when to become aggressive and knowing when to become defensive, when to stay defensive. If your edge is not there, there's no point risking your hard-earned capital. If your edge is there, then and squeeze it to the maximum, as long as your risk is managed. But when your edge is limited, then either don't get involved or get involved in a small amount and step away again. Quick fire. We're looking for the easy trade, the easy kill. We're waiting in the bushes for the injured an animal to come by. If you're thinking of a nature program, we're not trying to get the hard trades. We're not trying to be a hero here. We're just waiting until the nice setups come along that we can just go ahead with it, limited risk, and just take our target. So let's quickly go on to Thursday. Okay, Thursday, interesting day. Drifted lower, below that low. That sort of panicked a few people because we had some data coming out there, and that just caught a few people out, I think, because there wasn't any pullback for anyone to get out. We had a few bits of data at 1:30 London time, which was 8:30 Eastern. Then we had the what do we have coming out on Thursday? That was the housing starts jobless claims. Philly Fed, that was it. Philly Fed at 3 o'clock London time, 10 o'clock Eastern. But the market just drifted lower and lower and lower here, and I think this caught a few people out. No pullback. I was looking for a pullback to get short on this as soon as I started seeing this weakness, but we didn't get it, so no short for me. We then just broke through this low right on the 3 o'clock level, did a bit of a flick around, tried to push lower, couldn't get it. And then started to push back up. And now I took the short here. In hindsight, this was a bad trade. Now, why was it a bad trade? Okay, I did make money out of it. I got a quick 10 ticks out of it. In fact, no, I got less than that. I think I got 7 ticks because I realised that this was a bad trade. Now, why was this a bad trade? Now, the theory of the trade was I'm looking for the 50% retracement. We've pushed lower, we've pulled back, we're about the VWAP, a little poke above. That's about 50% of the move, and I'm looking for a further push downwards. Okay, that's the setup. But what did I miss here? I missed the fact that we'd been pushing lower into data, and the data came out, and then from the data we started to push up. So that becomes what I call a reprice. It's not significant reprice, i.e. we're not seeing a massive spike up and pull back and long on that. We've seen just a slight change in sentiment. We've just seen the market push lower, and now since the data's come out, it's pushed higher. So really, that 50% retracement back to lows trade should be negated, especially when you're seeing new highs in the ticks. You're not seeing any lows taken out after the data. You're seeing a good push up beyond the VWAP, beyond the point where you're looking for. A real weak market won't quite make it, or it will just tag it and then start to roll. They won't let it stay above the VWAP or above the 50% retracement for this amount of time. This was a good 10 minutes or so. If there's real weakness there, that won't happen. So I misjudged that. I got away with it this time. Took a bit of heat on it, but got away with it. But in hindsight, it wasn't a good trade. But we'll that's what happens. You don't always. We do make mistakes. We are only human. But looking back on it, that was not the trade to take. Realised that pretty quickly and came out with a small profit. Could have got a little bit more. Could have got me 10 ticks, but nevertheless, if you realise you're in a bad trade, your job is to get out with a minimal loss possible. Or if you get out of a profit, fantastic. Minimise your loss. That's the thing when you're in a trade. It's not hit your stop. Right. Then I realised that we were now looking for longs. We're looking for longs because the nature of the move after the data flushed a few longs out, just started to push back up. It was looking for some new levels. So what did I use? This was a slightly different tactic here. There was a little triangle here, or a wedge, whatever you want to call it, and that's just showing the market's just bumping its head. This entry here was a little bit different for me, but I was looking for the long. The wedge held here. We didn't break here, and I wouldn't have taken the long there. But the fact that we got one more pullback here, which was very shallow, very shallow indeed. And then we saw real acceleration in tape. We saw the ticks pushing to highs, and so I took this buy. Now, why did I take this buy, which is something I rarely do? It's almost like a breakout trade. I had the strength behind me. I had a good target in mind, which was the close. The stop was going to be reasonably shallow, reasonably short, should I say, because the low was only here. So entry here, the stop can afford to be here. That's around 10 ticks of stop, which is not too bad considering that we've got about 15 ticks of target. I like to go more than that. But when the market is tight like this, you can't always get what you want. So yeah, I took that, which was very much a tape read buy, pushed up, and I came out into the high ticks, which was here, coincided with the gap. I was happy to get that all out, all in there, all out there. We've got a further push, and that further push then to me sets up another long. I've got to be careful here because we are quite stretched, but I've also bearing in mind there's a lot of people who will be taking shorts like me here who haven't got out. So when it goes through there without pulling back, I'm still waiting for that one pullback to buy. We pushed through the previous earlier high of the day, the open, and yesterday's close, pushed to new territory, pulled back. We pulled back to the key level, but the interesting point at this level, I was looking for the small pullback to get long on the tape. I was looking for the small pullback on the tape to get long, should I say. Got the pullback to the zero on the ticks, got the pullback there, and it's a fantastic little tape read. A guy came on 100 and something contracts at 10.423. He smacked that straight on, and he got filled immediately. Bang, he got filled. That was the key to get long. There's a buyer there. He hadn't quite finished. It coincided lovely with the prior high. It coincided with the tick pullback. A lovely tape read. Bang, I'm in, and I'm in aggressively. You know, that's a lovely setup. That you can almost say if it doesn't go immediately, I'm out. So your risk can be so low on those sort of trades. You're looking for that little pullback. You're waiting for that little signal that just says we're going to have one more push up, and you know, let's go for it. This time we didn't get quite the drive I'd expect, but that happens on these slow days. You know, it just sort of, you get the push and then you just get a chop. We got our first scales out. That was 10 ticks. That was great, as it just poked through the high. So now we're in a free trade. Stop goes just below that low, and then I sat with this one. I thought we'd get one more push, and I actually posted that on the blog. I'm looking for one more push up. I expect it around the midday level. It came a bit later, but I'm not going to look a gift horse in the mouth. Excuse me. Got my long, got half left. Got that final push up I was looking for. Perfectly ticks to 1,000. I came all out there. There's a little bit more in it, but I was more than happy with that. All off that tape entry, all off that little pullback, all off that ticks to zero combined. Beautiful little setup. Very happy with that. No more on the day. Friday didn't trade at all. Posted that on the blog. The volume was so low. Couldn't get a good read on anything. Didn't feel like I had an edge. And when it's like that, I'm just going to step back. So let's see what happens this week. Good trading, guys. Don't forget to look at the blog, thedaytradingroom.com. Put some intraday updates on there. We're just about to open now. But I'm not going to be actively looking for anything special. I'm going to wait for the trade to come to me, keep an open mind, just see what the market's going to do, and keep that risk managed. Good trading, guys. I'll be back with probably one more video before Christmas.